So markets pulled back here today, and you can see we broke down from some structures. We were in this zone here on the Friday, ended up holding some support there, but today we tested those levels and broke down. Let's see if we're going to go a little bit lower here, or if this is just a shorter term pullback. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Starting off with the fear and greed index, you can see we were at a 50 down from a 53 yesterday. Markets rolled over a little bit back into regular greed on momentum, strength rolling down. It's been doing that for a couple of days, despite the fact that markets continued to go higher. Breadth going lower just a little bit. Put call ratio continues to hover in this incredibly low level. I think we're going to see a little bounce there. Volatility spiking up from that critical level as well in that 12.5 area. Safe haven demand also in fear. Junk bonds continuing to climb here in fear. Moving over to seasonality, remember the 9th was supposed to be the top. We got a little bit of a roll down here into the 16th. Monday next week is that low for the month based on this chart. We'll see how that plays out. Right now it is showing a little bearishness, and that works with the seasonality. End of the month from the midpoint on is supposed to be Santa Claus rally, small caps outperforming, and everything moving into the new year, but we'll see. Like I said, short-term bearish, and that's playing out right now. Looking at the economic calendar, there is basically nothing for today. Tomorrow, not a whole lot. 3-year note auction, and then Wednesday we start to get into that inflation data. So anything you hold into the close tomorrow will be impacted by CPI. I don't think it's going to be crazy. You can see expectations for the year-over-year number, very slight step up. Core month-over-month expected to be flat. Year-over-year expected to be flat. So just the year-over-year headline number expected to go up slightly. Nothing crazy there. And then you get the 10-year bond auction as well as the federal budget. And then looking at max pain here, you can see max pain at 600. That did move up slightly for the Friday session. 604 current price. Total options, not a lot. Put call ratio 1.8. So that went a little bit higher as well. So 600 might see a little bit of support in that area. Call wall still here at 606. Big put wall at 590. Wouldn't expect to get lower than that price. Somewhere between 595 and 600 probably makes sense in here. Maybe slightly higher, 601, 602 in here makes sense as well. But for right now, a little bit of bearishness makes sense. Moving over to the charts, looking at the S&Ps here on the daily chart, you can see we were down about 0.5% on the day. Momentum stepping down, big step down. RSI breaking below the SMA there. So all of the indicators showing some pullback. We talked about it here. Looked very similar to some of these pullback patterns. Consolidation, flat for basically 2 days. Big down candle right to the 9. And based on this, you would expect it to fall down to that 21 EMA if that 9 breaks at 604.04. Right now, we're almost at it, 604.32 after hours. If it breaks down to that 21, that's going to be another 1% lower tomorrow. And then if it breaks from here, that's where you're going to start to see those bigger accelerations to 2.25% into that next zone of support. So in here, 1% down to next support if that 9 breaks. Again, 604.04 is the 9. We might see a little bit of consolidation, pull back in time here before we see the break. Or you could see one of those accelerations. You can see we pushed to it, gapped, big move down to 21 straight from there. We got about a 1.5% down move there in just a short period of time. So we'll see how it plays. Right here is going to be interesting. Critical day of trading tomorrow as we get closer to that CPI read. And then looking at it here on the short time frame, just for a second, you can see 144 EMA right in there at pretty much the same level, 603.72, just barely below that 9 EMA. On the short time frame, though, this looks not so great, right? So you got the 9, 21, and 55 EMAs. Change in structure here. We were consolidated. Big move down. This is when you start to see slight pullbacks, continuation lowers, in my opinion. Definitely bearish structure on that hourly chart. My guess is the Tasty charts are also in bearish conditions on the hourly now as well. And then you got the 200 sitting down there at 690, just above that 599.64 level. And then moving over here to the Tasty charts for the SPY, you can see on the 4-hour chart, we're in bearish conditions now. So that is a big switch. We haven't been in bearish conditions since all the way back here on the 21 November candles when we got that big break back into bullish. And now we're seeing a change in structure here. Like I said, it seems like we're going to break down a little bit more. 4-hour chart support is going to be that 55 EMA there at 603.23, and then that would give you the lowest ATR band touch as well at 602.99. I would expect to hold a little bit of support in here, get a lower high setup, and then continuation down if it's going to do it. You can see last time we hit that 55, we pushed all the way through to the 144. If we did get a move like that, that would take us all the way back to the 596.22 level. Then you would look for the higher low off of this and then see if we could get that continuation. But in the short term, that gives you about 2.25% lower, just like we talked about on the previous charts. Moving over here to the NASDAQ, down 0.78 on the day, engulfed the previous candle. Not what you want to see. Momentum stepping down, RSI stepping down. Seems like we're going to get a little bit of a move like this, where you get an acceleration down into those bearish conditions, just like we did here. That would give you a price target in the 510 area, about $22 or about $12 lower, a couple of percentage points into here. Then we'll see if we hold that higher low structure and then get the continuation. We'll see. Right now it is sitting on a zone of support. We've seen this before where we held this support and then we ended up gapping through it and falling aggressively. This is an interesting zone. It's down a smidgen after hours. Definitely looks like consolidation at this point. Up candle, down candle, up candle, down candle. So we're in the same very similar price ranges we've been in for a while, and that step down on momentum is definitely concerning. And looking at it here on the short time frames, you can see pulled back through this, looking to hold this support in here around that 521.51 level. If it breaks from there, we're probably headed back down to the 514 or this zone of support in there. So gives you about 1.33%, maybe a little more, 1.75%. See how it plays out in the short term. Go ahead and extend out this trend line here, might be a little bit relevant. Over the next day or two, not really. Those are so close together. It'll probably push through both of those into this region here is what makes sense to me. Overall, though, short-term bearish. Wouldn't shock me to see a little bit of a pop in the morning and then some selling into the afternoon. Moving over here to the NASDAQ on the Tasty charts, you can see we also got that bearish reversal of conditions. So we're into bearish conditions, took out the trailing stops here on that first candle, continued lower on the 4-hour chart. Current support is the 34 EMA at 520.28. We'll see if it gets there tomorrow. It's holding that first ATR band to the downside right now, 521.69. Realistically, though, short-term price target would be that 518.44 level, maybe a little lower, 55 EMA there at 517.31, which is pretty much in line with what we saw on the previous charts. 517 area. I'll be watching this closely now that we've reversed into bearish conditions, waiting to see how this plays out. Are we going to get some sideways consolidation in bearish conditions, maybe a retracement test of the ATR trailing stops, or is it just going to cut straight lower? Definitely something to watch for. You can see on this previous move down, this is kind of the framework that I'm watching. We just cut straight down. These are a little bit harder to trade, harder to get out of. But sometimes you can see retracements, test the ATRs, then continue lower, test the ATRs, and then you get that consolidation break higher. You can see it back here where you just get a massive sell, short term, bottom, higher low setup, continuation from there. Right now, though, I would expect a lower high setup. Kind of looks like a left shoulder head, right shoulder. Momentum bearish, not a huge amount of volume. We'll see how it moves into the CPI data on Wednesday. Maybe that's the catalyst that we need to push this a little bit lower. So you get a retracement tomorrow, consolidation, sell into the CPI. That's another scenario to watch for, in my opinion. Moving over to the Dow and the Russell. The Russell actually held up okay, only down 0.5%, pretty much in line with the rest of markets. Dow falling about the same, 0.46, but it's actually fallen quite a bit over the last 3 days if you kind of want to play those together, because it has been 3 days straight in a row. Momentum bearish, RSI bearish, same here on the Russell, momentum on RSI, both looking a little bit bearish there. You can also see we closed below that 238 level, 21 EMA in there, 237.13. Watching this in here, VWAP there as well, 236.87, critical zone. Needs to hold if it's going to do it. It's held up really well despite being in that bearish momentum. Not a ton of volume. You can see we did gap higher, touch the level, reject off that 241.05 level, and then sell off really deeply into this down past the lows from the Thursday session. So a little bit of concern there. Again, 21 going to be critical. Same here on the Dow, 21 VWAP. That's your next zone of support that I'm watching in here. And that's going to be 442.79. If that breaks, 441.34. And then if this zone breaks as a whole, then we're headed back down to these previous lows, in my opinion, which is going to take you all the way down to the next level there, 432.78. Moving over to the Mag 7 down candle here as well, 0.32, still holding in there better than the overall markets. Momentum still bullish, stepped up slightly, RSI pulling back slightly. We'll see how it does. It's still at the trend. I expect this to pull back at least to here in the 311 area. 9 EMA sitting there at 308.67. We'll see how that one plays, but Short term, this looks bearish, clear resistance. If it tests the trend again tomorrow, that's going to be 323.54. Either way, though, I'm expecting something like this. A little bit of choppiness, continuation lower, touch the levels, and then we'll see if we get the continuation or not. Moving over to Apple and Microsoft, both of these continue to look very, very good. 1.6% and about 0.5% here on Microsoft. New all-time highs for Apple continues to be price discovery, still very extended at a 76.9, but who knows where it's going to go. Looks very, very strong, continues to go straight up. Didn't even touch the support here at 240.79. Did touch the low from the Friday session briefly, but then continued higher. And then Microsoft did touch the level, 440.72. Touched the support, held support, closed higher. Still think this is headed towards that 453.30 level. Continues to look like a consolidation breakout. Moving over to Tesla and NVIDIA. Tesla finished basically unchanged, very, very slightly positive. Momentum bullish, RSI still bullish, but a little bit overbought, still headed towards that 414.50 level in my opinion. And then looking at NVIDIA, gap down on the news this morning that China is investigating them for potentially monopolistic tendencies. And you can see here the gap down 2.5%, dojied on the day, didn't quite touch the 55 EMA at 136.68, but we're clearly below 140 now. Push through those levels. You can see last time we gapped to the 55, that was a buying opportunity, but at this point this looks like a left shoulder head, right shoulder. If it breaks through the neckline in here, I think we're going to head much, much lower, potentially down into that 124 area. Definitely looks like a change in structure with the high, lower high. Waiting to see if we get the lower low here or not. Momentum back to bearish, RSI back to bearish. NVIDIA looks quite weak. Moving over to Amazon and Alphabet. Amazon down 0.41 after making a new wick all-time high, which was at 230.08. Ended up closing below the high from the Friday session. And then you got Alphabet up slightly, 0.35, continuing to grind in here. As long as it holds above the 21, we're probably going to stay bullish. Momentum slightly bullish. RSI still slightly bullish. I've said it before, I'll say it again. I'm still not exactly sure where this is going. I think you could make an argument for a low, higher low here, but you also have a high, lower high here, waiting to see what this ends up being. So realistically, this is probably consolidation, and I would look at 179.42 as your next resistance. Moving over to staples and discretionaries, you can see both of these selling off. That's definitely not what you want to see. A little bit of an everything sell going on here today. Support still down at 81.85, 21 EMA, consolidation of EMAs, 55 in there as well. VWAP in that same area at 80.60. Momentum still rolling to bearish, RSI rolling to bearish. Definitely some selling volume happening over the past couple days. This is kind of looking like a flag setup, especially on the short time frames. Kind of looks like a bull flag, big move down, bull flag. We'll see if we get the break higher, but for right now it does look a little bit bearish. And then looking at discretionaries, we've been talking about this one for a while. We had the key level, the key trend resistance. We broke above it here on the Friday, touched this very, very long-term chart we've been talked about it on the weekend video, and then we sold off after overthrowing it. So market's respecting that for now, selling off about 1/3%. My guess is this is probably topped out, at least in the short term. Momentum hasn't rolled yet, but RSI is rolling down a little bit. Still very extended at a 78. Moving over to communications and oil and gas. Communications was the worst on the day, down 2.13%, headed back to that 21 EMA, engulfed the entire previous week, taking out multiple candles here, headed back down to that trend. Momentum, big step down, big volume. This looks terrible here on communications. It's been a massive run, definitely extended. Seems like it's going to break down some more. And then you got oil and gas pushing into that 135 area here on the Friday session after the big move up, topped out, didn't quite hit the trend, sold off pretty aggressively, some big down candles in there, touched the support. Now we're going to see if this is going to hold that support here. You can see the multiple higher lows here, multiple higher highs here. Is this going to continue to kind of grind up in this area? If it is, this looks like a good setup, right? So you got a big move down, key support level, touched it Friday, gapped higher, inside candle. Want to see the momentum step to bullish, and then the RSI start to roll up towards that SMA. See how it plays out there. You might see one more lower high, continuation lower before this bottoms out, just because you have the RSI here. So we're very extended. Want to see this rally up, hit the SMA. Might see the rejection, higher low setup, continuation from there. But you could see it like this, where you get a just continuation lower to those deeper RSI levels here. and then you just push right through the SMA, right to that next high, right through the SMA is a possibility. So see how it plays out. I do like this setup, watching the key level there, 135. Moving over to Breadth. Breadth continues to crater, 20-day going much, much lower, down nearly 10%, headed towards that 3660 level. We'll see what happens once we get there. Maybe a little lower, 3250, somewhere in there. Momentum still moving lower, RSI still moving lower. Market breadth cratering, 50-day also going lower, just slightly, 1.3%. It's trying to hold this higher low pattern. See if it holds in here or not. Momentum bearish, RSI bearish. This crater is here tomorrow down to the 5281 area. That's going to be terrible, but for right now, it looks like we could hold the higher low. Moving over to the dollar finding strength here on the Monday with this low, higher low setup, pushing through to these higher highs. Seems like this is headed back to 106.84. Momentum continues to roll down on the daily chart, but price action says maybe not. So maybe we end up getting the lower high setup at the 106.8 area, maybe a little bit higher. But right now, seems like the dollar is going higher, and that's probably why we're seeing equities start to fall a little bit more here on the Monday session. Moving over to bonds, JNK and TLT both selling off a little bit here today. Yields did go a smidgen higher. We talked about this zone being a potential zone of resistance. I thought we'd probably push through it, and I still think that we might. But for now, we're continuing to show resistance in this 97.16 area. Wick rejection on the Friday, wick rejection here on the Monday. 21 EMA, 96.82. Really choppy, not really giving us any good information there. Then we got TLT. We talked about this being a topping pattern on the Friday and the weekend video, I think. Now what I'm hoping is that we're going to come down, retest the 21 EMA, get that nice little setup that I want to see in here. The momentum's not really going with it quite yet, but if it tests the 21, holds support in here, and then gets the continuation off of there, that's going to be a really solid trade, I think. So watching this one closely, we're a little extended short term. Want to see it come back, test the 21, test the levels here, hold support, and then that's going to give you the higher low setup where you can get a pretty substantial run off of that, in my opinion. Moving over to the VIX, we did end up getting that big pop off of that critical level, 1275. We closed pretty much on top of it on the Friday, got the bounce and the rally here, headed back to the 14.7 area, 21 EMA in there as well, 14.6. If it breaks through there, we could be pushing a little bit higher. We said this was a critical zone, ended up bouncing from there a little bit more aggressively. We didn't end up getting too much of a consolidation yet. We've seen this before. If you look back here, we came into the zone, big spike up, short-lived consolidation. So it's not impossible that we just kind of consolidate from here, but that's a big candle, and it did close on the high. We were up about 11% there on the VIX. So definitely something going on, crossing above the RSI, bullish on the momentum as well. Moving over to my accounts, I did really well on the day, actually, considering how bearish everything was. You can see on the Russell, I did manage to stay very slightly positive. So I rolled out to 239 for tomorrow, and then I rolled down to 238 for tomorrow, and that's got about 87 cents credit on it. It's in $7 profit, so about $80 left on that. So mitigated all of the losses and actually squeezed out a small profit. Good trading there, which is actually really good considering that we had the spike up in the morning, and I did not buy into that. I stayed patient on it, and that worked out really well. And then looking at the Qs, I rolled back down and in here to 521 for 4 days from now for $4 credit. So I'm concerned that markets are going to roll down a little bit more, especially on the tech side within the next couple days. It's only 4 days from now, so I do have flexibility to go out a little bit if I need to, but I am more concerned about the downside, especially after the key resistances we've seen on many different stocks, as well as the Mag 7. You got communications breaking down pretty aggressively. So I think the risk is certainly to the downside, down about 0.75 on the day. Managed to only lose about $200 there. So you can see 820 on the shares, mitigated about $600 of those losses with the calls. And that's pretty good. That's about as good as I can do on a day like today with the way that I trade. Now that we've swapped into bearish conditions on the 4-hour chart, on the Tasty charts, that's also another indicator for me to play a little bit more defense here. If we start to see some of those key levels break down and we look at that 1.75% potential down move, I'll probably take these off and throw some calls on to try to get a little bit more credit on it on the down move, and then we'll look at those key levels for some potential shares to get back into the bull side if it does play out that way. So definitely being cautious, definitely playing defense here to the downside, and I do think there is certainly some risk. Let me know down in the comment section what you thought of the markets today. What do you think of the change in structures we saw on the SPY and the NASDAQ? Are we going much lower, or do you think this is going to be another short-term move with another potential higher high? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.